Hello, Jim here. Selling options is a great way to make some extra income on a monthly basis. I had a really good start to this month, September 24. I want to talk about that week. It was a shortened week. I had fewer trades, but I did really well with those few trades that I did make. I'm also going to touch on the recent rate cut, what that means for the market, and what may be coming down the road. So stay tuned. I think it's going to be well worth your while. Okay, let's jump right in. The Fed actually did a half point cut yesterday, and they alluded to probably doing two more cuts, a quarter point in November and probably a quarter point in December. At least that's what they're implying. I think they probably will. Now, is this a good thing or bad thing for the market? Right now, it's a good thing. I do believe it was baked in that it was going to be a 0.5% cut. So if we had done a quarter point or they had done a quarter point, it probably would have been a negative. The markets might have dropped. Will this continue? I'm not so sure. I'm expecting a lot of volatility over the next couple of months, especially with the election right around the corner. And then September is typically a bad month, and the second half of September can be really rough. So what's important is to stay safe. Don't change the way you've been trading. Stick to less risky types of trades. At least that's what I'm going to do. I'm going to be continuing to do spreads. I'm going to continue to take less risk, lower deltas, fewer contracts until we get through this, at least until we get through the election. I also wanted to mention it's really important if we do get some kind of a correction to stay in the market. One of the YouTubers I like to watch, or actually it's more of a podcast person, is Clark Howard. He had Wes Moss on his program recently. I believe he was out of town. I can't remember the lady who works with him, but Wes talked about how it's so important to stay in the market versus timing the market. So it's time in the market, not timing the market. And he talked about if you miss like the 10 best days of the last 25 years, you would cut your returns in half. If you missed like the 20 best days, you potentially had a pretty bad return, like 1 or 2%. I think even, just holding bonds would have done better. So, I think during these crazy times, staying in the market, but that it doesn't necessarily mean over investing. I'm keeping a fair amount of cash so that if we do get a correction, that I have some extra, cash out there to look at selling some puts on companies I really want to own, or maybe outright buying a company or two that I really want to own. One instance is NVIDIA. I currently have 150 shares and I need to buy another 50 shares so I can continue to do covered calls. So just wanted to talk about that and mention that. In my discussion with a lot of my members, one of the key things I like to talk about with my coaching is setting goals. A lot of traders don't set goals. It's more like they trade and they don't really have an idea of what they're working towards. So I encourage all my people that I'm working with to set some goals. I share my goals in my planning worksheet that I provide to my membership every week. And in there, it talks about what I'm trying to achieve weekly, monthly, yearly. And then it also you can actually see the previous times when I had changed my goals. I started with very modest goals because what was important for me was to, have some early wins to be able to reach those goals. So initially I set a goal, I believe it was $1,000 a month, and I went to 2,000, then the 3,000, 4, 5. I went from 6 to 8, and then I rolled back to 7. So I took too much risk at one point. And now my goal is more like 7,000 on a monthly basis, just for premium. That doesn't include dividends or appreciation of the stocks or ETFs, but setting those goals. And then along with that, kind of balancing the way I do things, so I do both calls and puts. So I'll do a fair number of covered calls. I mostly do my covered calls in my taxable accounts. I do most of my puts or all my puts recently in my retirement accounts. You'll see more of that at the end of the video where I share my trades that I did that first week of September, the shortened week. It's kind of a mix. And I find I probably, for every covered call I do, I probably do 2 puts around that. It may be as many as, a 3-to-1 scenario, but I believe it's like a 2-to-1 scenario. So I do 2 puts to every covered call. And I see that probably continuing at least until I get to a point where my retirement account is mostly funded, meaning I have mostly stocks and ETFs, and I can't maybe write as many puts. But since I currently have probably 60-70% of my account currently is mostly cash, so I'm primarily doing puts. But when that changes, I'll probably start doing more calls than puts. So, and then also setting a balance of, not balance, the guidelines. I like to set guidelines. Again, it's also in my planning worksheet. I like to set guidelines for doing puts, for selling puts. Things along the lines of what expirations I prefer. I like to do, right now, I'm doing between 45 and 60 days in expirations. For puts, I like to do around a 15 delta, 15 to 20, usually rarely below 15, unless it's an iron condor, then I'll do even lower. I'll do more like a 10 or 12 delta. Same thing with covered calls. I like probably closer to a 20 delta, and it's anything in the range of a 20 delta. So it could be, a 0.22 or 0.24 or 0.28. I just like that area. A lot depends on the strikes, how far the strikes are apart. May dictate, if they're $5 apart, well, it may be, one may be a 0.21 and the other one a 0.29 or a 0.21 and a 0.33. Now, for those of you who might be like, what is he talking about with delta? The easiest way to think of it is the probability. So when I say a 20 delta, it's like an 80% probability that position will expire outside the money. So in the instance of a covered call, it's like an 80% chance when I do a 20 delta that it won't be assigned away from me. And for a put, it's more like an 85 or 90% chance that it won't be assigned to me. So I take a little less risk with puts and a little bit more risk with calls, which may be something I need to kind of think a little deeper about. I don't know what you guys do. Are you taking a little bit more risk with puts and less risk with calls? I'd be curious to hear about what others do. And then I also wanted to mention, initially with a lot of my videos, I talked about how I did mostly market orders. Now that's changed since I moved to Fidelity. I'm doing more limit orders, and you have the bid, mid, and ask. So a lot of my trades, I will look at the ask, and I'll usually go a couple cents shy of the ask, and that's where I start trying to get the trade filled. I will at times still do market trades, but primarily I'm doing that, and sometimes it may mean I might have to replace that trade, going closer to the mid until it is filled. But I've been surprised. I've had some instances where I went really close to the ask and it got filled right away for me, which was really surprising. So I wanted to mention that because if you watch my earlier videos, I primarily did market trades, and that was more with Schwab. With Fidelity, I just find it's easier to do it with limit orders, and especially going in that scenario, picking a price that's pretty close to the ask and then moving towards the mid. And then, as always, being slow and steady. I had a lot of people earlier in the month that got out of positions, I believe, for losses or had to roll. And I stuck with some of those positions, and now almost all of them are out of the money. I think I have one position that's probably going to get assigned to me. That's ACLS, which is a chip maker for the EV industry, but I'm going to let it get assigned. I do think it's a good value. But a lot of the other positions, like AMD got in the money. I believe even Google got pretty deep in the money. And now it's out, and I've been able to roll it, and I have very few positions in the money, but that wasn't the case a week ago. Now, again, like I said at the beginning of the video, it could completely reverse on me. Like next week, the market could dive, and suddenly lots of those positions are in the money again. So, just being patient. I kind of get a good feel for a lot of stocks, so I don't necessarily trade on them unless I need to. Now, that being said, I am closing more positions than I used to. I'm also trying to have fewer positions open. If I can close for, an 80% profit, 70 to 80%, I typically will. I do still have some positions expiring, like I have, I think it's TMS that's expiring tomorrow or will expire. It's so far out of the money. I could probably close it for a couple bucks, but I'm just going to let it expire. So, trying to close, I definitely have found from my own research and listening to others like Tasty Live that, closing a position and opening a new one, which really is rolling, but doing it separately, you end up doing a little bit better. So those traders who pick a percentage, say, I want to close at 60%, and then do that, maybe they do a stop loss or they just close the position when it's pretty close to that 60%, typically do better than, others who just roll, like I used to, just roll. So I just wanted to share that. It's something I'm working towards. It's not perfection, it's slow and steady improvement. And then, having the patience to right the ship and to, not panic and not let something, cause me to close it for a loss. I've also found that my 10% rule, so something that's in the money by 10% or more is when you really need to be concerned about it. When it's less than 10%, the chance of early assignment really drops. So just knowing that also gives me the opportunity not to panic and to wait for the stocks or the ETFs to come back up. Now, that's another point that I wanted to mention. ETFs are definitely a little bit safer than stocks. I've had hardly no ETFs that have been assigned to me or from me. I think maybe one or two in the 3 years I've been trading. So definitely ETFs are safer to trade than stocks, primarily because of earnings. You don't have to deal with earnings. So that being said, this next part of the video, I'm going to talk about the trades that I did at the beginning of the month, and why I chose them, why I made the particular trades, and how they worked out. So stay tuned. I think you're going to enjoy this next part too. Okay, I'm going to jump into my spreadsheet here in a moment. I did want to talk about my memberships quickly. I have the 3 levels: Investor Club, Trader Club, Coaching Club. Investor Club, you get access to all my worksheets. You also get access to my trades as I make them. I typically will make the trade, then I'll do a post in Patreon and a post in Discord literally right after I make the trade. Now, I put detail into each of my posts. I talk about why I like the stock. I talk about profitability. I talk about debt. And I also talk about, you might want to get in at a certain level. If this is a stock I've been trading for a while, then, setting up a new position would be different than rolling a position. You might want to go lower, a lower price, a lower delta. So I put a lot more detail into these posts that I do. So again, on all 3 levels, you get that. You get all the worksheets, you get all the collections within Patreon. Then in the Trader Club, you also get Discord, which is the chat community. And then you also get everything in the Investor Club access. And then you also get this VIP Connect. It's a bi-weekly group meeting. We have one coming up on Sunday at 8 p.m. where we're going to each bring 2 of our favorite stocks or ETFs, and we're going to talk about those. We're going to kind of look at a couple of different companies from different people and see which ones we like the best, especially with these high prices, with the market being so high. And then finally, I have my coaching club, and you can see I only have 7 remaining. I believe I maxed this out around 100. But it includes everything else, but then also bi-weekly 101 15-minute coaching calls, and this is on Zoom. They typically will run to 30 minutes, but it includes some hand holding. I can share my screen. You can share your screen. We can talk about, my trades, your trades. We could talk about setting goals. We could talk about pretty much anything that's on the member's mind. You could also ask me about retirement, how I'm planning to retire, or even stuff related about my business, how I've set up my S Corp, how I deal with taxes, I use QuickBooks, I use Gusto. So just wanted to share that. Now let's jump into the trade. So at the beginning of the month was a shortened week, with Labor Day, with the market being closed. It was only 4 days, but it turned out to be a really good week and kind of a good week to kind of share with others. The first trade was a covered call Airbnb. Now Airbnb got assigned to me back in August, I believe around 118. Now I'm selling covered calls on it at 125. So, and this was expiring on 10/18. The current price at that time was 116. I rolled it to 11/15 and kept the same strike. And I brought in 537. I've been really surprised how good the covered call premium has been for Airbnb. So with the original trade, covered call trade, and this trade, 1,084 is what I have brought in since literally August 13th. Now you may wonder, why am I showing this as close? I actually just rolled it again today with the market being up so much. It made, I think, another nearly $700 in another roll. I rolled it out till March of next year, but I increased the strike to 130. I do think Airbnb, and like I said, a lot of these stocks may fall back next week. But it's worked out pretty well. This was one that got assigned to me. And I have had a loss with it originally, but now it's moved up nicely. CLS is, I believe it's a cloud business. It's Celestica, I think I'm not sure I'm pronouncing that right, but I've had this cash secured put since July. And I've rolled it a number of times, so this was another roll. It's right at $45. So if you're looking for something not too expensive, it's still a good buy at $45. It's still around, might have gone up to closer to 50, but this was a 16 delta. And then I rolled it. I kept the same delta, rolled it out to 1018. And I brought in $192, which is like a 17% return. The Airbnb for a covered call was 11.5%, which is, again, pretty surprising. And I brought in 448 on this CLS trade. Next is NVIDIA. This is a vertical put credit spread. So I have done a few vertical put credit spreads with NVIDIA. This one I did on the 4th. It was a new trade, 92.82. So now with today, the market being up so high, I believe NVIDIA is up $8 or $9. I might be able to close this early. This was a 16 delta. I really like NVIDIA around $90. I don't know if I'll be able to pick it up, but this was a 1018 16 delta. Again, it was the closest strike to a true 15 delta. At the time, it was $109. And I brought in 227, and then the required capital, which is just 2,000 minus the 227.26, is 1772. And this is like a yearly return of 106, which is the 227 divided by 1772 adjusted for the year, 365 divided by 44 days until expiration. So, and then I did Broadcom, another company I just recently started trading in. I originally owned Broadcom a long time ago. And it was when I had a advisor. He actually talked me into getting rid of it. And boy, was that a big mistake. No telling what it would be worth now. I don't even want to crunch the numbers. But I did trade on it on the 5th. I rolled it. 145, 135. It was a 20 delta. It was at 137 at the time, and I rolled it, kept the same strikes to 1018. So this was like a monthly roll. and I brought in 287. I brought in 995 since running this trade. They required capital 1712. It's like 142% return, again, using adjusted for the year with a 43 days DTE, so expiring in 43 days. It's currently way out of the money, so. And then Polaris, this is the only trade in my Schwab brokerage. And I'm trying to get out of this trade. I don't really want it in my brokerage, so I've been rolling it, still making really good cash. So I rolled it out to 1220, kept the same strikes. You can see I brought in almost $1,900 since May of 21. So I've been dealing with this for a fairly long time, but I brought in 298. And this is almost like a 28% return, which is 298 divided by 3701, adjusted for the year, which, since it's pretty far out, it was 105 DTE. And then I did DocuSign. This is another company I like to trade on. This one I closed. It was a vertical put credit spread 52. That's supposed to be 5250, 4250, expiring on 9/20/24. And I closed it for $14, which ended up being like a 90% profitability. So another one that I closed early. Now UPS, this is a covered call. I was also assigned UPS at the same time as Airbnb last month. And it's also above, it's now profitable. It was another one that they got hammered because of earnings, but now I've done pretty well with them. And this was a $130 covered call that I rolled. I rolled it to November 15th. It's kept the same strike, and I brought in another $507. Like Airbnb, you can really pick up some really good premium. And since I've started trading it, I've brought in over $1,100. And I believe it's since August. I think I started trading UPS around August. And it's like a 10.39% yearly return. And that's just the 507 divided by the 25,463, which is my cost basis. And that's how I come up with the 10.39. Now, the last trade was Academy Sports. I rolled it out. 5750 was the strike, and I believe it's right still around 5750. I really like Academy Sports. It's one of my favorite places to shop. At that time, it was at 5358. I rolled it out to January at 5750. I believe I had to roll it out to January because of lack of expirations. But here you can see I brought in 1481 on these Academy Sports trades, ASO, starting from the beginning of the year. So it also brought in some pretty good money. This trade I brought in 427.22. Since it's a cash secured put, I'm using the cost basis is, since I don't have a put, it's not a spread, it's the full value. And this is almost like an 11% return in that time frame, which again is quite good for a cash secured put. So for all of these in that 1 week, I might be including the wrong one. That's 99. I went too far. So if I include these, because the last one, the ASO was 99. So for that first week, I did 7 trades. I brought in 2,036. One was an actual closing trade. So if you take that, let's see, 1, 2, 3, 4, 5, 6, 7. So I did 6 trades, not including the trade I closed, which is, again, a little bit more than 1 trade a day. I found that 1 to 2 trades a day works out really well for me. I get on the market, I get off the market. And here you can see I'm at 52.48, and I have another whole week. Well, I have tomorrow, and then I have all of next week, and I believe 1 day of September the next week. So I should be able to hit my goal. And over here you can see at the top of the page, you can see my 7,000 monthly, 1750 weekly. And I've been able to beat that 7,000 pretty pretty normally. This time it may be a little bit close, but if I continue to do better than the 7,000, I'll probably up my goals. Like here, you can see my goals. I'll probably up the goals above 7,000 again. Like I said, they were 8,000 at one time and I rolled them back, but I'll probably change that and go back to 8,000 since I've been able to do it pretty consistently the last 2 months. So that's what I wanted to share with you guys. Let me know what you think. You know, did I miss something? You know, what kind of trades are you making? What do you think about the Fed cut? You think it's going to be a good thing for the market or a bad thing? So let me know. I try to answer most of my comments within 48 hours. So look forward to hearing from you. And as always, thanks for taking the time to watch my video.